各位来宾、各位老师、各位教授、各位学术先进，大家好。那今天是我们这一系列讲座的第一场。那我们的这个主讲人是我们邀请到严继才老师来。早上其实因为本来是王永之老师要来开场，但今天女儿感冒了，所以就请我来这个代打一下。然后我还非常紧张，我不知道怎么样能够比较好的介绍严继才老师。其实应该大家对他都蛮熟悉的。好，那所以我就先跑去问那个何宇秘书长，他本来应该是他来主持啦，就说他怎么介绍林老师，他就说这个林老师大家都很熟，你就说他很厉害就好，然后我觉得像有点太敷衍不行。后来我又跑去问陈志杰老师因为他是理事长嘛，本来应该也是他要来才对，就说我怎么介绍林老师比较好，然后陈老师就说讲3个重点就好了你就说这个他是这个路易斯安那州立大学的讲座教授然后后来。本来是那个爱荷华大学拿到财务博士嘛，然后现在路易斯安那大学，那讲在说之后又到香港理工大学，也是担任讲座教授。那第3个重点就是今年非常恭喜林老师刚刚拿到我们的教育部玉山学者的一个殊荣。那除了这个学术成就斐然他的发表在财经前4大期刊极好极满可以说是金满贯之外呢，那这个林老师私底下就是也很热忱那对年轻学者都很照顾，那也可以充分感受到说他对于这个学术研究的热忱所以相信今天的演讲呢会跟这个刘德华的演讲会一样精彩那我们就掌声鼓励欢迎我们的严继才林老师来今天的演讲。
那今天的题目是我回到台湾之后，我是去年到中央大学就任这样，所以还是新进员工然后我开始看到台湾的经济，然后怎么样跟财务连接在一起这样，所以我就想到这个题目这样其实是两个题目那这2个题目其实有一点是跟cross discipline 就是说 supply chain 在 management 上这个供应链的管理是很popular 的那我觉得说供应链对 financial market 的影响其实也是蛮大的这是第一个。那第二个就是说strategic management 一样的是在management field 上他们很重视，他们有一个 field 叫做strategy 那我在想说这个在财务其实也是有很好的应用这样啦，所以我就讲一些我回来之后开始想的这些问题这样了那 for the first topic we'll focus on four research questions. Okay, the first question is: studies have shown that IPOs in the U.S. has been declining over time, and the decline is quite dramatic. Okay, but on the other hand, in Asia, it's booming in IPO market. In number of public corporations, so this is quite puzzling. Okay. And so, how to explain or how to reconcile such a difference phenomena? It's worth study. Okay. So the second question is, we look at the way that the financial market in the U.S. it become a bigger firm become bigger. Yeah. And on the other hand, in Asia, it's many small firms. So what are the competitive advantage of these large US firms and relatively small Asian firms? And the third is also related to public corporations. Public corporation, if we consider supply chain, what is the advantage of being a public traded company to join or being a public traded company? Okay, so we'll talk about risk management. That's important in supply chain. Okay, so if we look at this phenomena and consider supply chain, we may be able to explain the rise in Asian public corporations and the decline in public corporations in the US, and largely because the different roles that the different roles of large firms in the US and relatively small firms in Asia, they are working together to advance product to global market. And the second topic also have 4 questions. Okay, we are quite familiar with winners and losers in the momentum literature, winner and losers. And I've been thinking why the winners continue to be winners and losers continue to be losers. If in corporate finance, we all think of if you are losers, you must try to change your position. If you are losers, you would like to become a winner. So what strategic change that losers are likely to adapt to change their weak position? Yeah. And the second question is, winners, they cannot be always winners. So what strategic change they try to maintain the winning position? And do their strategic change create value or destroy value? When I wrote this PPT, and I found out that a big case, an interesting case is Intel. We have Taiji in Taiwan, and we look at Intel struggling. And they constantly try to adapt new changes so that they can become a winner again. Okay. They were dominant in chip industry 10 years ago, 20 years ago. They are dominant force. But for some reason, they become weak. They become losers. But even though they are in a weak position, they still try to change. Okay. So what are the difference between the strategic change of winners and strategic change of losers? And so the first question is, do winners' strategic change and losers' strategic change contribute to the momentum return? That is, winners continue to be winners. If that's the case, then winners' strategic change must create value. If losers continue to be losers, then losers' strategic change must destroy value. And the question is why? That's the outcome. So there must have a difference in their strategic change. Okay. So I have questions, but here's the caveats that I have to mention. Okay. I have not done empirical studies to address these 2 sets of questions. Okay. So all I have is ideas, conjectures, and many questions, of course. Okay. Even though I don't have answer, but I think it's fun. It's fun. And to share my thought with you guys here. These 2 sets of questions actually are quite important if we look at industry in Taiwan. They are dominantly supply chains. So supply chain management in Taiwan is important. And we also compete in Asia, competing in global market. So the strategic is also important for Taiwan's corporations. So I think this set of questions are quite relevant for us to think, being scholars in Taiwan. Okay. So I welcome any comments and suggestions you may have. So this is just thought, intellectual exchange. Okay. So I hope you won't be disappointed because I cannot give you definite answer. All I have is conjecture. Okay. So let's first look at the IPO phenomena and global supply chain. I'm going to start with Jay Ritter's PowerPoint. Okay. Jay is a pioneer scholar in IPO literature. Okay. And he studied these IPO trends intensively. And so in his JFQA study, look at changes in IPO volume. And surprisingly, IPO volume declined substantially since 2000. So you can see a clearly decline from 2000 onwards. Okay. Yes.
According to this figure, I think there's a normal period between 1998 and 2000. So if you cut points for 2000, of course, after that, they are too low. But if you cut points at the middle of it, at 1997, then average after 1997 will be greater than.
Understand. So where is the cutoff point? But I think the structural break is kind of visible to us. It's around this time. The break point. Okay. And why is that point? And actually that corresponding quite well with the rise in Asia, public corporation as well. And of course, this is the beginning of internet bubble, you may call it. There is a big technology breakthrough, and that change things. Okay. And one of the technology that allow companies to do is compartmentalized. That means that you can a product, you can put it into many small pieces and then put together. And what that means is that for many of these small pieces, if you can improve one small piece of the product, then you are able to contribute to enhance the product. Okay. So that's the digital economy. Okay. And that also, I think, changed the industry structure. And Jay also look at a large firm and small firm. And the most dramatic is the number of small firm, small IPO. So small IPO decline substantially. For large IPO, still there. Okay. It's less, but still there. And this is a quite interesting figure to me. Okay. And what this figure shows us is IPO here. So a lot of IPO earlier year. And then since 2000, IPO number declined. And on the other hand, merger acquisition increase. Okay, so number of merger acquisition increase. And it started in late 1990s, okay, and continue to 2000s. So it appears that private firms exit strategy, What I mean exit means that exit from private firms to become a public firms. The exit strategy, they can remain as private firms or become a public firms or become a part of a large firm. Okay. And this figure shows us that many private firms choose to become a part of large firm through merger and acquisition, being taken over, rather than become a independent firms through IPO. So IPO volume declined substantially. And it's not because of the valuation. Yes?
But how about the value of IPO? Does it increase or decrease after 2000?
It is decreased as well. Decrease. The volume, number of IPO decline, and overall value is also decline. Okay. But the merger and acquisition increase. And it's not because of the valuation. Here is the PE ratio. And then we have also IPO volumes. So after internet bubble, you can see that the PE ratio slowed down, but stabilized here. But the volume of IPO is quite small. Go.
Are you suggesting that, because you tackle supply chain, are you suggesting that the decline in the IPO volume is related to the WTO? Like, because at that time China and Taiwan joined the WTO.
Yes, yes,
So
yes.
you're suggesting this has to...
I think so. I think so. Yeah, that's also technology, and as well as China joined WTO, and that opened up for more and more supply chain. Okay, and in the U.S. we call that outsourcing. Outsourcing. Many of the productions. I was in Louisiana. And there was a hurricane, Katrina. I think you all remember that. And so Tulane, a well-known university in New Orleans, right after Katrina, they wiped out all the engineering college. The reason is most of the manufacturing jobs go to China, go to Asia. So that's also impact academic as well. Okay, so at that time. So you can see the change is quite interesting for us to observe. Okay, so why has IPO volume in the US been so low? And of course, it could have other reasons. For example, at that time, they also have SOX that require small firms, large firms to file informations. So the requirement of regulatory filing, that's become a burdensome and increase the cost for small firms. Yeah. And they also have this global settlement, which changed the way that analyst recommendation. Okay. Before this global settlement, analysts are quite biased. They all most likely to provide optimistic recommendations, and that cause a lot of troubles. So there's this global settlement. Okay, so the investment bankers are fined a large sum of money, and that changed the practice. Okay, so could this because of the analyst coverage that lead to smaller firms unwilling to list their IPOs? Okay. And Jay and his co-authors propose there could have other possibility. If we look at merger or acquisition, it seems that companies in the US become bigger and bigger. They could have an advantage in digital economy that become a bigger is a better alternative. So Jay's idea about this economic of scope hypothesis. Increase the speed. If you have product, increase the speed to the market, to reach global market. So getting bigger fast is become more important than in the past. And that's the reason we see company become bigger and bigger. Okay. So when I was at PolyU, I taught a corporate finance seminar. And at that time, I also look at these papers and come up with something that's quite interesting to discuss. Okay, suppose this is a trend. This is a trend. Become bigger is more important and become more competitive. Okay. And US has been prepared for such a change since 2000. And if we look at the company size in Asia market, they are still relatively small. If bigger is important, be able to compete, then smaller companies in Asia are doomed. They will not be able to compete effectively. So that was my thought at PolyU. There's no way that smaller companies can compete with large US firms. And US large firms has been transforming to become bigger 20 years ahead of Asian firms. So I call this competition hypothesis. It's firms are competing to each other, and smaller firms will be in disadvantage. Okay. But after I came back to Taiwan, I realized that may not be the case. That may not be the case. And you can see that Jason Huang came to Taiwan, very friendly, and go to 夜市啦，请老总吃饭啦。Okay. So there must have some reason. Again, let's continue to talk about what's in the literature, and then I will show you my thinking about how the supply chain may fit into these pictures. Okay. So if we look at the number of unprofitable firms, the small firms are hard to compete. So here, percentage of small firms that are unprofitable. So number of small firms that are unprofitable. And we can see compared to large firm and small firm. Large firm are profitable. And the percentage of large firm being profitable are much higher. And most of the small firms are unprofitable. That means small firms are hard to compete with large firms. And they also consider the SARS effect. And without SARS, the change is not that much. Okay. So the legal requirement cannot explain the change in the public corporations in the US. So small firm IPO is even harder to compete. So small firm IPO become less profitable. And here is the percentage of small firm IPOs that have a negative earnings per share. And it's not because of more firms go private. If they become public traded, not many go private. Okay. So it's interesting to see that a dramatic change in the IPO market in the US. Okay. But on the other hand, firms become bigger and bigger through merger and acquisition. Okay. So young growth firms are more likely to be involved in merger and acquisition, either being a target or being acquirers to acquire other firms and become bigger. Okay. And Ritter observed this upward trend started in around late 1990s. And this is my thought. Become bigger. What's the advantage of become bigger? If we look at large US firms like Apple, Google, even NVIDIA, the way they grow, a very large extent is acquire smaller companies. And what type of companies they tend to acquire? If you look at the company, most is they have a new technology. So if there's a new technology, they can become potentially competitor. So they acquire potential competitor in merger and acquisition and use their technology to become their own. Okay. So reducing competition by buying out potential competitors. And in that way, they are able to control the technology more thoroughly. And the second advantage is using competitors' technology to improve their production process, as well as enhance their product quality. So Jay focused on the IPO volumes, and also look at merger and acquisitions, and they provide a different contrast. Okay. And they also have studies that look at US listing gap. And this is focused on public corporations. Okay, the number of public listed firms. And in this study, Dodge, Caroli, and Stoltz, these are big shots in finance, Cornell and Ohio State. They look at the number of public listed company, and it tend to peak around 1996. And afterwards, it started to decline. Okay. And the decline is quite visible. It's quite visible. So this is the US public listed firms, and then decline. And non-US countries, this is the number of public listed firms. They're increasing. So go up that way, go up the way. Okay. And so in this listing gap, they look at the delisting rate accounts for about 46%. And new list rate, low new list rate accounted for 54%. So the decline in public corporations in the US to a very large extent due to fewer IPO firms. And of course, delisting, a large part of delisting is companies being acquired. Okay. So combine the two that we can explain why public corporations decline in the US. Look at, is the public corporation really eclipse? Evidence from Asia Pacific. And they found that while the US has experienced a 50% decline in the number of public listed corporations, there has been an 800% increase in the Asia Pacific region. So this is a dramatic difference. Here is overall picture. And you can see from this figure, the increase is around this time or this time. You can see. Okay. So 1996 is the peak in the US, and since then it's declined. And the point is quite nicely matched. Since 1996 is the beginning of a dramatic rise in public corporations in Asia Pacific region. Okay. So this is the increase since 1996, and this is increase. And this is in Taiwan. Number of listing in Taiwan, the increase around 2000. There's a huge jump in 2000. 我离开台湾很久，所以在2000年的时候 ，what happened at that time?
I have one question. What's the source of the number of IPO in Taiwan? Is provided by TJ or UJ?
I don't know. This is from the paper, Caroline and Kim's paper.
This is the reason that I asked for the number of the after the drop in about 2000, because I'm wondering whether they counted the number of, for example, the OTC. Yeah, it's a structural change.
More likely is listed on Taiwan Stock Exchange. That's my guess. But I think this also related to China joined WTO and opened the market for Taiwan companies. So the turn of Taisang, I think it's started around that time. Okay. And even though businessmen went to China for doing business, but they have corporations set up in Taiwan. So number of public traded firms in Taiwan dramatically increased around 2000. That's my guess. And there's a certain advantage of setting up corporations in Taiwan vis-a-vis in China, because their capital market are not that open up at that time. And interestingly, in China, Hong Kong, Japan, and South Korea, the pattern is also quite similar. Okay. Number of public traded firms. So there appear to have a structural change in the US and as well as in Asia. And what caused that? I think that's a question worth for us to consider. And so after coming back to Taiwan and observe the industry in Taiwan, so I ask myself, do global supply chain reshape the landscape of public corporations in global market, in Asia compared to in the US? And the way they shape these public corporations in different markets differently.
Yeah, I have another question before we the next topic.
Yeah.
So we come back to the number of the listed public in US has declined after the 2000. Is it possible that those private firms have more resources, or alternative route to access to the capital market. For example, the SPAC or something like the fast trade IPO.
Yeah, that's a alternative hypothesis. So as I look at the literature, they also mention the private equity also play a more and more important role. Okay, but consider all these alternatives. Give us an interesting thought that why companies choose to be acquired. Why companies go for being acquired? Remember, as the need to become bigger, become more important in digital economy, because that they can get product to global market quicker. And what that means is that if company can obtain new technology to improve their product, then big company will be able to pay more to acquire other firms. So this is also economy reasons for entrepreneur to think. They go for IPO, of course they benefit. They benefit as price jump, their wealth increase. But alternatively, when his or her company been acquired, entrepreneur also have this financial benefit. And who can pay more in IPO market versus being a takeover market? Okay, and as companies become bigger and bigger and their product can sell better and better and more, then the large corporations are able to pay more to entrepreneurs that provide new technology. So I think there's also this incentive there. And to dig that out, probably we need to get into data more carefully. So it's just my thought. And PE backed private company, they can choose similarly to IPO or being acquired. And as smaller firms, smaller IPOs face more difficulty to compete in product market, then it's probably easier for private equities get the money in and run and then fund another private companies. So this is from financial incentive viewpoint. I think there may also play a role in it. So as firms in the US become bigger, and many relatively small firms in Asia become public traded companies. So what are competitive advantages of large firms in the US versus relatively small firms in Asia? And we know, look at large US firms like Apple, like Amazon's, like NVIDIA's. Okay. They're good in design. Okay. And they also have very strong R&D. And they have global reach. Okay. So we talk about supply chain. If we look at Apple, of course, the end product is iPhone. One of their products is iPhone, and they sell to the consumers. It seems that they are in the bottom of the supply chain. But no, that's not the case. They design the whole thing to begin with. Okay. So they control the whole supply chain. And once they control for supply chain, so they also involved in choosing which companies can better produce good product for their research, for their product design. Yeah. And once they have a good product, then this global reach become very important. Yeah. And if you look at iPhones, you go anywhere, you can have iPhone stores, or you can buy it online. Okay. So I was in Louisiana and quite familiar with Louisiana product. And I was quite surprised as I travel around. And I went to a restaurant and there's a Tabasco. You know what is Tabasco? 辣椒酱. Okay, it's Tabasco. That was from Louisiana, not far away from Baton Rouge. So I visit Ivory Island quite often. So again, it's a global reach. Okay, so product that produced in one place, if it's good, then it can reach globally. And this is a huge market, huge market. Okay. And another advantage is the economy of scales. If you can sell your product globally, that means the quantity is huge. Okay. And a large quantity, you get economy of scales. So I've been thinking, if we look at who produce iPhone the most, if we look at the parts, Honghai. Okay. In China, what's the company? Fusicang. Okay. They have huge manufacturing facilities in China. Okay. And they assemble iPhones. But if we look at the profit margin for Apple and the profit margin for Fusicang and Honghai, you'll be amazed how much the difference is. Okay. So Apple is around 50% profit margin, 47, 49%. And for Honghai, around 4%. So 4%. So what determines this pricing power along this supply chain? So this is also in my thinking. Okay. What determines this supply chain? Pricing power. This is important for us as investors. We look at profitable companies. I was quite happy to see when I look at these papers and which look at countries in Asia Pacific. Okay. And there's one figure that caught my attention. That is R&D spending. R&D spending. So for each company, we have R&D, and then we can divide it by total AC. So we can see the relative R&D spending. Okay? And then we can aggregate them together as R&D spending for a country. So we have R&D spending in Taiwan, R&D spending in China, Hong Kong, Japan, South Korea, Vietnam. Okay. What do you think about R&D spending? In Asia, which country has the most R&D spending? Japan. You think Japan? Okay. Okay, the highest is Taiwan. So I was quite impressed by this number. Okay. So what determines pricing power? If you can produce good product that cannot be replaced, if you far ahead of competitors, your pricing power would increase. And how to improve your technology to producing good product? R&D. R&D is important. And so it's a good thing to see these good trends in Taiwan that has been developed. Okay. I did some research on R&D, and this is interesting phenomena. Okay, so imagine yourself. Yes, question?
I guess the R&D spending in Taiwan is highest, mainly coming from TSMC. Or it's...
Remember, this is aggregate. It's possible that R&D in Taiwan are largely contributed by TSMC.
I'm thinking about the nature of the different industries. I'm not sure. I just wonder what number that really contribute to it. Because besides this semiconductor production, we didn't see much industry that's being...
Not necessarily. If we look at Guang, their camera is also top notch. And this... Guang, okay.
It's the iPhone.
Yeah. Yes, yes. So these are all need R&Ds to improve. And so the whole supply chain is... So yesterday I was reading an article that says that the AI's driving force is Taiwan. Okay. And largely because the Taiwan companies spend a lot of money on R&D, and we see the outcome and the performance. So this is kind of a nice outcome for us. Okay. And the way I observe this R&D is that if we consider you as a researcher or inventor, where would you like to go? Where would you like to go? Most likely is a productive society that allow your talents to develop. Okay. So you are more likely to choose a productive society that is very innovative. Okay. And also the R&D spendings. If you produce good outcomes, you are more likely to contribute to more R&D spendings. So consequently, the difference between R&D have and have not it's become bigger and bigger. So this is a exponential difference. Exponential difference. So if you look at companies that have their patents and the number of patents, and the companies that do not have any patents or no R&D spendings, the difference is become exponential. And so it's become more and more difficulty for countries that do not spend R&D to catch up. So the difference will become bigger and bigger. Okay. Until there's some change, of course. Until there's some change. Yeah. But otherwise, it will be difficulty for the less innovative countries to catch up. Okay. So I was quite happy to see that we have such a nice R&D investment in Taiwan. Conversely, if we look at smaller Asian firms, what are the advantages do they have? Agility, very flexible, very flexible. Yeah. And their smaller size enable them to become agile and responsive to market change. I was very impressed by TSMC. It's a big corporation. However, they are able to respond to customers. Look at the companies, the chip designs. Different companies like Microsoft, like Google's, Meta's, they have their different designs. Okay. And Taijidian is able to respond to their demand and change their product process and to meet their demand. And if there's any difficulty, they can change it quite quickly. Okay. And such a agility is a very valuable, very valuable. Okay. And we're talking about relatively smaller Asian firms. Okay. Also, there's a cost advantage. The cost advantage, chip level cost, of course. But here, there's one term that I would like to describe. It's we call the regulation arbitrage. Regulation arbitrage. In US, the environmental regulation is quite tough. And it's not so in Asian countries. So it's easier for Asian firms to manufacture. And not that I would say that they will pollute environment, but the requirement of environmental regulation are relatively not that strange. Okay. So consequently, that there is advantage for US firms to move their production facilities or even outsourcing to Asian countries. Okay. And for Asia, it's closer to this production facility. Okay. And also relatively low level cost. This low level cost. In general, our salaries are relatively low. Okay, so I was discussing with colleagues about why Taijidian is able to success and why Intel's, Samsung's, and in other countries not able to catch up Taijidian. Okay. Of course, they have a good technology. Okay. But the low level cost in general in Taiwan could also play a role. The reason is that once you get into Taijidian, you work hard, you accumulate your experience to meet the demand of all different customers' needs. Okay. And you work hard, you accumulate the experience of being engineer. And such a valuable experience would not have much value outside Taijidian. The reason is the relatively low level cost in Taiwan in other industry. And this low salary in other industry allow Taijidian to keep all this valuable experience of their engineering. Conversely, if we look at Intel, they also have customers' demand, of course, and their engineer can also accumulate experience However, it's a tough job. Okay? And it's easier for this experienced engineer to find a good job in other industry. So consequently, it's more difficulty for other companies like Intel to accumulate this valuable human capital. Yeah. So for that reason, that we all directly or indirectly contributed to Taijidian's success. Okay. So how to share the benefit? How to share the benefit? We contribute. Low cost. How to benefit? 买台积电的股票。So just a thought, okay? Because the labor cost in Taiwan is relatively low, okay? And that allow manufacturing firms to use relatively low operating cost. Consequently, their profit, economic profit is relatively high, and that also push up their stock price. So just some thought on this area. So are large US firms and smaller firms in Asia competitor? If they are competitor, we're doomed, not able to compete. They have all these essential technologies to compete, better resources. But on the other hand, they could complement each other in supply chain. So based on their competitive advantage, one is good in design, good in R&D, and on the other hand, smaller Asian firms are good in manufacturing. And agility to adapt to the demand for change in product. Okay. So this is the best combination. So the combination of large US firm and smaller Asian firm, the combination become more efficient and able to produce high quality product to reach global market. So part of these ideas, I've been had joint work with Yun Xiang and Lin Lao Shi in the 交通 Yangming Jiaotong Daxue. So I was quite surprised. If we look at large US firms, they reduce the number of public corporations by acquiring them. But along with supply chain, they bring companies up in Asia. So I think this supply chain, we just started. And the number of firms in Asia that associate with a large US firm is quite amazing. To try to use supply chain to explain this phenomena in financial market, we need to understand this supply chain literature. Okay. So I also dig out a bit on what's important in supply chain. Okay. Of course, this is big supply chain. 供应链管理. It's big in management. And of course, the two key things that related to supply chain, that are related to us in finance, is how to finance supply chain and also the risk management. But there's interesting things that in the supply chain literature. And Forrester in 1961 looked at the industry dynamic. Okay. And he discovered this whip effect, 波 whip effect. 牛尾巴一摇动，它所造成的影响有多大 ？They have a interesting experiment. It started with 啤酒 ，okay. 喝啤酒 ，okay. So beer production is a process. It's a process. And of course, the stores they need to forecast the customer's trend. In hot weather, more people would enjoy beer. Okay? If there's any celebration, so they would have this demand and supply, demand fluctuations. And this is quite obvious to researchers. Okay, demand fluctuate. And the store need to order how many beers that shipped to the store. Okay. So if you are the store manager, how much quantity you would order? If there's a slight increase, in your forecast that demand for beer is going to increase, as a store manager, you need to order from beer production. What would be the quantity? You would add a higher. Okay, so you add more. If, for example, 10% increase, you probably will add 15% more to ship to the store. Okay. And if one store, one beer shop, increase by 5%, and you can imagine other beer store will also increase 5%. Okay? And that number become big when you aggregate them together. Okay, so the factory that produce beer get all these customer orders, and there's a significant increase in demand for beer. And so manager in these facilities need to consider how much materials that we need to order. Okay, now the forecast is increasing 15%. Okay, and it's possible that there may have more demand coming in. So let's order more. Material, 卖酿酒用的 okay, so all these materials that we need to order, and so let's increase a bit, okay, and such layer, it become at the end that a small change in demand forecast lead to a huge change in the production and in the upstream. So this is what we call the bullwhip effect. And so researchers in management science, they look at these issues, and they found that not just in beer production, in many other industries, they observe very similar this bullwhip effect.
Especially in that industry, they overproduce a component, overproduce the estimate from the sales. bring it back to the factory and they oversupplies, then they have to clean the factory. Then that delays the economic growth.
I see. So it also affect this IT industry as well. So it's also quite obvious. No wonder that they always has this inventory adjustment time period. They even visit stores to look at how this really translate into demand, into production orders. Okay. So they look at it, they go to 3M to look at the diaper. Okay. Because baby need diaper. So they forecast the birth rate increase. And so how many diapers that we need to produce. And then we need to order materials. So from small change, again, lead to quite large over there. Okay. So this also applies to 3M's diaper effect. Okay. So the demand order variability in the supply chain were amplified as they move up the supply chain. And HP, as you mentioned, this IT industry, they also found out this bullwhip effect. Okay. In this case, they look at HP's printer, laser printer. Okay, it's a hot items. Again, the forecast in the demand for the product, and then up to the upstream production, that the quantity become quite huge or quite variable.
Excuse me, if they expect the demand to go down, there still will.
Yes,
same.
they will cut. Cut more. So that will lead to the shortage. And for that reason, they have a delay, like iPhone delay. You know, when customer needs, you need to wait a month, 2 months. So this bullwhip effect is quite real in supply chain. And so you can see where I'm going in this direction. As a finance scholar, dealing with uncertainty in supply chain is a huge task. Okay. So given the risk in supply chain, how can entrepreneurs in supply chain share the risk? So in finance, we're talking about diversification. We're talking about risk sharing. We're talking about risk taking. Okay. So imagine that a private company that joined the supply chain and need to deal with this uncertainty in supply chain. The entrepreneur would have a big burden in dealing with such uncertainty. But becoming a public company allow entrepreneur to share the risk with investors. Of course, by sharing risk, entrepreneur also share the benefit of joining supply chain. There's another dimension in supply chain. Of course, because it's this bullwhip effect, the demand is quite uncertain. Depends on where you are in the supply chain. Okay. So studies have suggested that it's important to have an agile supply chain, meaning that companies in supply chain need to be able to very flexible and very responsive to change in demand in product market. Okay. So of course, large company, they have control in this supply chain. And so the development in the literature is that let's share information. Let's share information. So from the top to the bottom, let's have a system that allows us to share information so that our order would really meet the demand for the market. If I guess how much increase is there, then I add up, and then the other add up. So in this way, the information distortion is quite high. It's quite high. So it's difficult to control. So this supply chain literature suggests that let's use technology. Let's use information sharing system to improve our product process. Okay. Of course, for the supply chain, this agile and the lean, it's non-lean. There's difference between that. Okay, the importance here is it need to be very sensitive to market's need. So being in the supply chain, company need to be very sensitive to supply chain change. Okay. So what this means is market sensitive. And you can see where I'm going again. Okay. The second research question for us in finance. What may be the best way to capture market sensitivity? What may be the best way to capture market sensitivity? Which variables is the most sensitive to market information? I will bet you don't know. Stock price. Stock price is very sensitive to information, to changes in demand. Okay. And that's the second reason that being a public traded company have certain advantage in supply chain because they can use stock price. We know that in corporate finance, we have this investment price sensitivity. Investment price sensitivity. When the price is high, company usually will increase production. Okay. And being a public traded company, they can, using the information contained in stock price to guide their production, to guide their investment decision. Okay. So for this risk sharing with entrepreneur and investors risk sharing, and also using stock price to capture the information contained in the product market, okay, to capture this market sensitivity. So allow public traded company to be successful in a supply chain environment. And that's part of the reason I argue that why more public corporation increase in Asia, simply because supply chain become more and more important. And in the US, the decline in the number of public corporations is because they are more and more emphasized on product design, in R&D, in pushing the new product. But manufacturing of all these new product shifted to regions that have advantage in producing them with the technology, with the quality, with the skill levels. Yeah. So that's, yes?
Professor Ying, sorry, I have a small question.
Oh.
Is that after we observe that U.S. large firm they acquire the U.S. small firm to reduce their competition, and in your opinion, why this story does not happen in the Asian market? I mean, we are competitors to each other. If we are all in the supply chain, then why not we acquire the same story in, for example, in Taiwan or China? Why this story does not happen at the same time?
Good question. Good question. A large part is culture. Yeah, you acquire me, you have to walk over my dead body. Yeah. So it's difficult. The takeover market is not that active. Not that active. In US, it's of course, this is the whole industry. They have investment bank serve as advisor, and then they match up the buyers and sellers together nicely. So they have an active M&A market. But in Asia, the culture is a big barrier. Okay. 我临死我也不要卖给你。Family business, so that could also contribute to that. Yeah. I believe there's a benefit if we have an active M&A market. But for some reason, that's not the case. Okay. Okay, let's go on our second topic. Strategic change of winners and losers. 我在香港的时候，魏国强魏老师，他做很多研究在这一 momentum 方向啊。那刚好，前年是 Jagadish and Timman 他们的 paper momentum paper 30 years anniversary 30年的啊。So we had a big conference at PolyU on momentum. And that started to get my thinking about momentum. And the momentum, I'm studying corporate finance. And how a corporate finance guy looking at asset pricing. So my thinking is a bit different from this asset pricing perspective. Okay. So return momentum is well documented in many countries, even in Taiwan. I think Qin Yang did a research on Taiwan, momentum in Taiwan. In the past, we didn't observe any significant momentum in Taiwan, but Qin Yang study showed that if we remove February, the momentum is quite strong. So it's a Chinese New Year effect. 新年. So this is also an interesting phenomenon. Why February? Could it be that that the bonus and investors that they receive bonus, they tend to buy loser. They tend to buy loser. Is that because of that? So there's more funding available in February in Taiwan, and tend to invest in loser because stock price has been declining, and this would be a good bet for extra money, 压岁钱或者是 bonus. Okay. Anyway, that observed in strong momentum in other months, suggesting that in Taiwan momentum also exists. Okay. And it's quite pervasive in the US, in other countries. However, I've been wondering if you are a loser, in a momentum sense. Your stock price has been declining for the past 6 months. What would you do as a manager? Would you be struggling to come up with a new change, to change your position from losers to winners? So what would losers do in order to change their losing position? And similarly, if we look at many winners in the past, like Nokia, it's a dominant mobile phone company. And I visit Finland quite often, so I visit, and it's a Finnish company. So at that time, when I visit, some Nokia accounted for 30% of Finnish stock market in terms of market cap. So you can see how big the company is. It's quite similar to Taijidian now in Taiwan. Okay. But being a winner for so long that for some, they didn't see the competition coming in. And they become loser. And once they become loser, it's difficult for a loser to turn around. Okay. So let's lead to what should winner do to keep the winning position. They should not stay quietly or inactively, thinking that they would always be a winner, because the product market is changing quickly. So the key question here is, do strategic change of winners and losers contribute to return momentum? What that means is that strategic change, company adapt, try to improve performance. But for winners, strategic change, it's likely create value. And given that we observe losers continue to be losers, likely that losers' strategic change will destroy value. That's my conjecture, so that winners continue to be winner and losers continue to be loser. So that's the starting point for my thinking of linking these two together. So as I mentioned, Nokia, JCPenney, and nowadays Intel is struggling. Why you think Intel, in such a dominant company in chip industry, failed to detect a new trend was developed? What do you think? I read an article recently, and it pointed out one factor. That is, in a particular year, they have a CEO change. Traditionally, they have engineer as a CEO. But in that particular year, they have a CEO from management with economic background. So how would such a change in CEO that used to emphasize on innovation becoming in lack in innovation? Is that because of a CEO in finance, in management, that push some of the resources from R&D to marketing? or from R&D to other areas, and that lead to the demise of Intel. So that's one factor that the article mentioned. So how big an influence of a CEO? So it's kind of interesting article for us to see, or a company. Okay. And almost daily that you can see news about Intel try to change. And the recent news is that Intel tried to spin off the manufacturing, the 晶片代工 that 台积电 is so good, okay, because cannot compete with 台积电. But anyway, you can see that Intel become a loser, but it's not stay quietly. It's still try to change and try to reverse the fortune. So this raises a very interesting question. Why do some firms benefit from strategic change while others fail? Okay. So we have a good example from loser side. For winner's side, let's take NVIDIA as an example. So they keep updating their product. Okay, Blackwell. Okay. So not just the next product they introduce to the market, they even introduce the next one and even the next one in advance. So they are well prepared to try to keep their winning position. And all this is their strategic. We are not just winning nowadays. We would like to try to keep winning in the long run. So there must have a difference between the winner's strategic change and loser's strategic change. And we can see that one obvious for we to see as a finance is a decline in stock price. We call that losers. And that also reflect their lack of resources, especially human capital. So losers often lack expertise and resources for successfully implement strategic change. Also, losers typically face pressure. They are big shareholders who push pressures for change. And the takeover market. So last month, the month before, there was a rumor that the Qualcomm is going to take over Intel. So these are also a pressure that management feel. Management can sense that they need to do something to change, to improve their position. So such a pressure from market, from creditors, from investors, push losers to make a change. And consequently, they tend to react to pressure. So their strategic change are more likely for survival, for short-term solution. So they are more of a reactive short-term strategy that aim to deliver a quick result, okay, but fail to address the root that caused them to decline. So loser strategic change often provide temporary relief, but may weaken the firm's ability to innovate or even compete in the long run. And this could lead into further erosion of value. And of course, we as a finance major, we like to see numbers, we like to see value creation or value being destroyed. That's our focus on it. Yeah. And in other disciplines like management, like marketing, they would like to see changes. Strategically, they change the company's direction. Yeah. And we want to see the outcome. How does that affect company's value? Yeah. If company adopt strategic change for short-term purpose to release pressure, to release shareholders' concern or creditor concern, usually that would not help their long term. So usually, losers' strategic change aim for survival and likely destroy firm value, okay, in the long run. But let's think of the short-run reaction, the short-run market reaction. What do you think short-run market reaction in terms of announcement effect? So my thinking is that they would have a short-run market reaction for strategic change. And part of this reason is that they create a higher expectation, raise investors' expectation, and also likely to raise the uncertainty. Sometimes uncertainty about a company's profitability is a good thing. It's a good thing. Okay. If we look at the growth, the compounding function is a concave function. Okay, so here we have a value on the vertical axis, and then on the horizontal axis is the growth rate. When company has a low growth rate, the value increase as they increase the growth rate. The value increase is quite small. But if you growth rate increase from 10% every year to 20% every year, the increase is quite dramatic. So this is a concave function. So what that means, what this concave function means is that uncertainty has value. You take any 2 points and then get the average value that usually is higher than the average growth rate. So uncertainty about profitability is value, has value. And when company announce a strategic change that first increase investors' expectation about growth potential, and that also increase uncertainty about profitability, and that tend to raise stock price. So my bet is that short-term reaction will tend to be positive. But long-term is likely destroy value because it's difficulty for them to turn around. Conversely, winners' strategy change. They have a strong financial position to begin with. Okay. So this means they also have resources. And do not have the pressure from investor, from creditors, from capital market. Okay. So they can think long term. They can think long term. Okay. So what they would like to do is to create a real option. Whenever the real option, it's time for them to exercise this real option, then they will do it. Okay. And just like NVIDIA's case, that they developed a real option, have the second generation product, next generation product. Okay. All this is real option. They haven't really exercised it, but they already have R&D there. Okay. So winners' strategic change tend to create real option. And this real option help to create a growth opportunity. And when times come, they would exercise it. Okay. This is also like Apple. We can say it Apple from computer, and they are able to develop iPhone. And from iPhone, they are able to develop iWatch. Okay. And iWatch not just for looking at times. It become a health device. Okay, look at your blood pressures, look at your sugar levels in your blood. So this is an advance. But they wait, they have the R&D capability there. They wait until that the time comes that they introduce the new product to the market. And all this is they prepare for the change. They also have this culture for change, meaning that they anticipate the change. So they have culture ready for change. So consequently, winners usually foster a culture of continued innovation and adaptability, and making them more open to change and better equipped to implement new strategies. Yeah. Yuan Zhi gave us a talk at NCU the other day. He looked at the diversity, how diversity affect innovation. Okay, diversity, it's a culture. It's a culture. If a country or a company has a culture that are quite open-minded to include ideas, then that enable employees to be more innovative. Okay? And this is a good thing. And this is what the culture means. Okay? So winners usually have a good corporate cultures that allow them to see the change coming. Okay. Yes?
Does the ESG performance will influence the momentum for the winners? Because the ESG for good things for the firms, right? And maybe the employee right, the labor rights, and the environmental protection, that's good thing. They have the information knowledge to the stock market. And the stock market will validate, include the information, the ESG information. Maybe they can make something like momentum. I think. I don't know.
So you think, will ESG strengthen momentum or weaken it?
The weakness. In the past,
I think it would strengthen. I think so. Simply because they have more resources to invest in ESG. That's my think, but could be wrong. But it's interesting whether ESG will disrupt this momentum trend.
long-term momentum,
No.
not short-term. In the past research, we also find that we have a 3 months or 6 month momentum, and they will reverse. The momentum effect will reverse. But in ESG, we can find they have the long-term, the stock price return. The stock price return is very long-term, maybe 1 year or 3 years in my research. But I think they maybe have a long-term momentum effect.
So that's what I mean, that there was strength, real winners. What I mean is that it's real profitable companies. They have more resources to invest in ESG, and that also attract more investors.
Okay, so according to your personal experience to visit Nokia in Finland, how do you judge why they fail? Because they have been successful for a long period of time, and then also emphasis on technology human, technology comes from human nature, let's say, their venue, right? So, what is a long period successful firm fail?
I think Nokia and Intel are very similar in this regard. They are victim of their winner position, meaning that they are in a comfort zone too long. They are winning, they are dominated the market, and thinking that no one can affect their position. That's what they think. Nokia control almost 90% of mobile phone at one point in time. Intel control about 90% of chip in PC. So that's the comfort. They are in the comfort zone and they stay there, thinking that no one can challenge their position.
Do you feel this when you visit them?
That's the common lots of discussions that summarize that why Nokia failed. Okay, and they have product very similar to iPhone, but they don't think customers want them. So they shelve the product there, and they continue to use their product. And once iPhone was invented and then promoted in the marketplace, it's too late for them to catch it up. So, in a sense, they are the victim of their own success because they think that they would always be winning. 90%, it's okay, 90%. Market share declined to 85%. It's okay, we still have 85%. We still make a lot of money. Nokia thinking that way. Okay. I was in the US at that time, and that was really their thinking. It's okay, we still have 85%. And similarly, Intel has similar mentality. 85% is okay. We still have 85% market share. And then the next quarter, 80. And then 75. And its decline is when the decline forced them to face the reality. It's too late. It's too late for them to catch up.
So even for those such a big firms that to remain agile to face this, changing environment.
Yes, yes. And you can see that's how competitive it's there. So I was giving a talk to EMBA at 中央大学, and they ask what would be a good strategy. So my suggestion is take your team out and then look at the show, the tech show. Okay, 电脑展. There's always new things coming out, and companies would like to promote them. Okay, so exhibition, the show. You have to go out and see what new product is there. Okay. I live in Louisiana, in Baton Rouge, not far away from New Orleans. Okay. And one time, a friend came to visit because he attended a fence, 篱笆, 栏杆, okay. So 篱笆的 show. Okay. It's nothing to us, is that right? So you can have a 几个竹竿, that's a 篱笆. Okay. So he took me to the exhibition, and I was blown away that industry of a fence industry, how big it is. It's unbelievable. They have a showroom all about fence. Not just one room. The New Orleans has a big convention center. So all you can imagine about fence is there. So to us, it's 3个篱笆, that's a fence. But to the industry person, that they are able to design for rich clients, each fence, they have a camera, they have a sensor. So they have all different things, new things is out there. And that's how competitive it is. And there's a market. If your product is good, able to attract customers' need. So winners tend to approach a strategic change with incremental steps and pilot programs before fully committed to a large-scale transformation. What does that mean? In our turn, that's real option. That's real option. Okay, step by step means that they first do R&D, and then they will small scale to implement it. Okay. And once the time comes, they will exercise real option and for a large scale transformation. And once they have a large scale transformation, they will dominate the market. Okay. So they are waiting. They are ready and waiting for the time to come. Instead of reactive, they engage in proactive strategy planning. Okay. They anticipate competition is coming, so they always ready for change. So Jason Huang give a talk 在台大. What did he say to us, to you guys? 要用跑的，不要 run， 要用跑的，不要用走的。为什么？ Because you need to get ready for competition. Yeah. And winners have talent and resources to create real option for strategic change and likely to create value. We know real option is valuable. Okay. So they create real option and which lead to higher valuation. So winners' strategic change create value through real option. Losers' change aim for survival, so potentially destroying value. So it's hard to imagine that you make change and end up destroy value. A lot of reason is that you are in a losing position, and managers and employees, they don't have patience. Okay. And change create uncertainty. Change create uncertainty. And manager and employee are impatient. Plus, you face more uncertainty. That's the worst combination. To deal with uncertainty, you need to be able to solve uncertainty, to reduce it. Okay. But if you are in a pressure to perform, and you also are uncertain in the way of, I don't know when I will be laid off. I don't know when the company will be taken over. So in such a situation, it will be difficult to successfully implement changes. So this also involves these psychological issues. Being a loser is in a difficult position. Plus, you make changes, you create uncertainty. And that compound things. So consequently, that's my argument. Winner continue to be winner because they create real option that create value. And loser will continue to be loser because their strategic change will destroy value. Okay. In the momentum literature, it appears that winners stay winners, losers stay losers. They are in a static way. They're in a static way. Appears no change at all. But I think they try to make changes. Okay. And if we try to compare number of changes by losers and number of changes by winners, which one you think will create more changes? Losers would have more changes. But my guess is more changes create more uncertainties. And that destroys value at the end. And so this is kind of interesting for us to think. What would be the optimal strategic change? What would be the optimal? If you wait to change until you become a loser, then that means that's too late. You are in a weak position to implement change. Okay. If that's too late, then what should be the optimal?
Yeah, one question. But in the long run, the loser tend to be winner. The winner tend to be loser. Yeah, for example, we extend the observation up to 7 years. Then we can look at some winners become losers and some losers become winners. Now, how can you explain this phenomenon?
Good question. Good question. In terms of value creation, the winner still create more wealth. In terms of percentage, in the long run, losers' percentage could be higher, but the wealth they create is relatively small. That's one thing. Okay. The second thing is there's a survivorship bias there. There's lots of losers being kicked out or been removed, been delisted. So again, it's a kind of interesting story. I was in a PhD program, and I read debunk and this paper, long-term reversal. So I was in PhD program, a poor student, and I working hard as a part-time and make some money. I was quite happy. And so I'm a finance student. I should know how to invest. So I put some of my small money in a loser, because the literature that loser will become winner. So my money was gone. So I remember that. This long-term reversal is questionable. And momentum is more real. Okay. So what is the optimal strategy? The optimal strategy is you keep innovate. You keep your winning position. So winners continue to be winners because they have an optimal strategy. Otherwise, you will be destroyed at the end if you don't have that strategy of keep changing. We look at 台积电 as an example. So they have 从24纳米12纳米一直往下 it's advanced. So they advance their technology. And now they are 5, 3, 2, and 1. Okay. So this becomes smaller and smaller and smaller. And the good thing about become smaller is become more efficient. And the heat that generate from it become less. So they become efficient in energy management. So from this trend, you can see that good companies, they keep innovate. Okay, cannot stay still. So optimal strategy, not for short term gain. It must focus on long-term value creation. And also leverage existing strengths and align with core competency. And of course, need to have a good corporate culture. So encourage experimentation and quick adaptation to changes. So this is what I have for strategic change of winners and losers, and why I think winner will continue to be winners and loser will continue to be losers. And to some extent, that's related to their strategic change. Question?
As you mentioned that there were lots of the very successful firms that in the long run they become losers. For example, Nokia, for example, Intel, for example, HTC, a Taiwanese firm. They were quite rich and they spent lots of the money in R&D or something like that. We need to publish paper in journal. So we need to have some variables or that can distinguish between the firms that can be successful and can be loser. What can you tell us about the idea to distinguish the firms that will become the winner and become the loser?
Momentum literature shows us the best way to distinguish a good firm from a bad firm. Because stock price quickly reflects available information.
I think that those, for example, the Nokia, the Intel, or the momentum stocks in Tesla, but very long run.
Yes.
But however, in very short time, they become loser.
Yes, and stock price picked that up. Yes. So that's the reason that the stock price is useful for us as investor. Okay. Of course, there are other informations that you need to look at, visit the companies. Okay. So the other day, being a U.S. investor, the other day, Cao Wei.
Oh, the Super Michael.
Okay, so they suspect that their accounting has some problem. Yeah. And the stock price declined 32% one day and then 15% the next day. What do you think today? Continue to decline? So you can see how stock price quickly reflect the information. But before these things blow up, they already have some information about their bookkeeping practice that are questionable. So if you are sensitive enough to pick up such information, then you will be a better off position. Okay. So,
JC Penny is because the COVID-19 so close the 850 store, but they no lose the strategy. So it might call the environment. So,
it's a good.
Penny.
It's a good question, but I like JC Penny. I visit quite often.
It's American the retail store.
Yes. And there's also a shift in technology in terms of shopping.
No.
Online shopping become more popular.
So it's another lost strategy.
Yeah. So if they use stores, just the physical stores to attract customers, COVID-19 is a factors that can kill them, but also technology. There are other companies that survive. So if you guys have a chance to visit Shanghai, you can see many empty stores. Okay, very fancy. Even in Hong Kong, very fancy. Okay, physical store, but now many traffic, simply because online shopping becomes so popular these days. Okay, so there's a change in the consumer behavior. Okay, and that technology enables us to make the change. Okay, so your question, sorry.
What's your suggestion for optimal strategy for users? Because if you are in the loser's position, if you make a lot of changes, it's only create more uncertainty, as Professor mentioned. So what can users do?
It's too late for them. Not just they don't have chance. Okay, it's a very small percentage that they can turn around and become. So it's probably a good ideas for being acquired. Okay, for shareholders.
You cannot compete to join them.
Correct. Okay. So there was a discussion that 20 years ago, Intel tried to buy NVIDIA. But I think in today's market, NVIDIA can easily acquire Intel and make it a better company. So how losers can make a change and become winner, it's possible as a long-term reversal. If you can survive long enough and you can invest for long run, it's possible. It's possible. Okay. So I like to watch Korean drama. Okay. And in general, I like movies. So there was this movies about baseball team. Okay. And so this is based on the U.S. Stories that an economist likes sports so much that he started to record players' statistics, the betting percentage, and all this, how good he is in one base, second base, third base. Yeah. And he joined a baseball club and has moved up and hired as a manager. And so he has a strategy to turn around this losing team. Instead of acquiring the big star, he tried to, based on statistic of how each players that are available in the marketplace, and the salary is quite low, and persuade the players to join the team. And one by one, and so he are able to, based on statistic, and turn around a team of a losing team into a winning team. So it's possible if your focus is try to change the team in the long way, in the long run, more of a fundamental way. Okay. You don't worry about whether the next season your team will be losing, but you're building a team that will be successful in 3 years, 4 years, 5 years down the road. They may have a chance to turn around.
So speaking of sports, I think people like to root for underdogs, right? So would it be possible that some investors, they are more interested in finding losers that have the potential to become winners?
I'm the other way. Okay. I taught at LSU for a long time, and LSU is good in football. And when they are winning, I like to watch them play. And if they are losing, I just close it out. Okay, but it's possible that some would like to root for losers. It's possible. Okay. So I don't know. I don't know that. I'm just a casual fan, not in that deep of so I can answer your question that way. Okay. But I watched the Dodgers and Yankees last night. Okay. It's just 5-0. So Yankees is going to win the second game. But suddenly, it's just... So a lot of uncertainties there. Yeah. And so Dodgers are able to capitalize their Yankees' errors and then turn around. Yeah. So it's kind of interesting to watch. Yeah.
Yes. Just follow your comments. I think Jensen Wang may not buy out the Intel because the company culture of these two companies are totally different. And the charisma of Jensen Wang to NVIDIA is just like Steve Jobs was to Apple. So that reminds me of a case. It's about GE. The former CEO of GE, Jack Welch, used to select 3 excellent successor candidates, but he can only choose one. And when he chose one to be his successor, and the other two went to the other company. Then we can see what happened to G these days.
It's decline.
It's another thing.
Yeah. Yes.
Because it reminds also one thing about the mobile phones. The first one, the analog. The CEO Rick Tsai of MediaTek. He went to Nokia and to sell his chips, but Nokia declined his proposal, so he went to all the manufacturers in China that creates the wide brain industry. That's the first one for mobile. And the second phrase is the smartphone. The smartphone totally is, I think, is the industry revolution. Change all the way, not only the mobile phones, all the way of the human behavior, about the consumption, about almost about everything, even about the education of the young people. Change our life. So I'm wondering that is there any paper to analyze or to discuss the importance of a CEO? How to define a CEO? Is there any variables of CEO? The definition of a good CEO? How to save or raise or create a big company?
We know that CEO play a very important role. There's some research in finance more on compensation. That's one big area. The other is CEO's experience, like natural disaster affects CEO in the early life, and then that change their risk perception, and that change in risk perception affect corporate policy later on. So there's this type of study, but how to distinguish a good CEO that can create value for shareholder and best CEO, I don't know. Do you guys? That would be a nice way. Okay. So we know Jason Huang is good. So he definitely will create value. Apple, Tim Cook, they are good CEOs. Create values. Okay. For best CEO, they probably quickly been fired. So that's also they had to survive. There are pressures for them to perform. So for that reason, there are literatures that look at, for example, merger and acquisition. When market react very negatively about a merger and acquisition announcement, then the CEO that initiate the merger and acquisition are more likely to be fired. So we have studies that look at this. And I'm guessing that if we look at when a company introduces a new CEO, if stock price decline on the day that new CEO is announced, it's probably more likely to be fired. Okay. So market participants have information. Even board directors may not know. Okay. So there's studies that look at this type of issues, and many use stock price reaction to see how market knows versus companies. Mm-hmm. Yeah. Yes.
R&D expense, just a moment I find the paper, is the early is the Taiwan is the expense 8,980 million，就是8980亿，那占了 GDP 3.96%，全球第三，仅次于以色列跟韩国。
Very good, very good.
Thank you.
So you can see, so we spend a lot of money on R&D, and that build a good foundations for the industry. It's good to know. Thank you. Thank you. Yes.
How to we define a good CEO? Maybe the good CEO, they have overconfidence or powerful CEO. They can create the first value. But the other ways, there may be an energy problem. The firm must pay a lot of the energy cost for the powerful CEO. But how can we to see these things and the investments, and to start with that?
Again, it's quite challenging. We can, from CEO's investment, we can identify overconfidence in the company, more powerful. It's a good thing. It's a good thing.
Yes.
And their studies also look at founding CEO or inventor CEO, so different category.
Maybe some CEO like the superstar.
Yeah, yeah. But it's not necessary that they would create value. We know that if it's inventor CEO, that means that if a CEO has name on a patent, at least one, then we classify that as an inventor CEO. Usually that makes companies more innovative. There's more innovation coming out, and which is good for the company.
But they must increase the energy profits. 代理问题. Maybe the powerful CEO, they will increase the energy profit. The firms must spend a lot of monetary cost to monitor the CEO.
Not necessary.
Okay.
Not necessary. So this agency problem is there. It's there, but I've been thinking why the scholars Jensen didn't get Nobel Prize. What do you think? He started this agency literature. It's there, but many economists, many scholars look at how big the agency problem affect from value. It's not that big. There are mechanisms that are able to correct this agency problem. Human capital or reputation is quite important for them. What other factor may contribute to for a CEO that would act in a way that helps shareholders?
They may be a founder CEO.
Yeah. So and also corporate cultures.
In Taiwan, we have, for example, about Ye Shufei, Bo Da, right? He's a founder CEO. They also found the chairman, but the Bo Da was going to close. They have a big, problem in the market, right? And the many investors will be hard. But I think the powerful CEO or the superstar CEO, they can create firm value or create a stock price. Maybe they will to reduce the sum cost in the market. Like agency problems, agency cost, I think.
It depends on the long-term effect or short-term effect.
Okay.
And what you observe could be a short-term effect. Yeah.
Maybe a short term.
Yes. I discussed with students about value-weighted index. Why is value-weighted index make more sense? Because large firms that become large, usually has its reason or ability to compete in the market. So if you buy large firm, you're more for sure that you will get a good return back. Okay. Because they've been competing in the product market, survive and able to succeed. Okay. So value weighted makes sense. And I use this argument in China. And my friend said, no, this does not apply in China because large firms in China are not due to competition and winners. They are more of a state-owned enterprise. So value-weighted index does not perform well in China. So this is kind of different stories. It's different factors. Okay, it could be I think you have this good sense about CEOs. Maybe you can write a paper on different type of CEOs and which type of CEO, more be able to create values. Yeah.
I built an index to measure the CEO power and overcome the CEO in the ESG and the stock price. Yes, the paper is published.
Okay, very nice. Do ESG create value?
Yeah.
In what way? No, I'm just curious. Okay. Any other questions? Yeah, go.
According to your figures, there's growing trend for merger arbitrage during these 20 years. It's opposite to the IPO trend, right?
Yes.
Down and maybe up. Do you know why it's a difference?
Say it again.
Why is there such a big difference between IPO trend and merger arbitrage trend?
Because they complement each other. It's we call the private firm exit strategy. So you suppose you have a company and it grow to the extent that you can decide whether you become a public traded company by going for IPO, or you can sell your whole company to other company. Which way you would prefer? So you can choose one or the other. And so for that reason, when one is increased a lot, the other will decline. Simply because the exit strategy, if you favor one, the other one will decline. That's my explanation. But for the Asia increase, there's an alternative. Even though I try to explain it in a supply chain argument, but there's another argument that is the growth rate in economy is much higher in Asia. And that can provide more resources for private firms to become public traded firms. So it's an alternative hypothesis to test. Okay. Of course, supply chains also contribute to the economic growth. Okay. And how to distinguish the two will be a challenge as well. Okay. So it's just some minor things that we need to consider. If you can provide an alternative thinking, it will always be good. Okay. Any other questions? But if no question, thank you. Appreciate your coming to this.